I have started the recording. So today what we'll be talking about is the chart patterns, right? So the chart patterns which we'll be looking at is only with respect to candlesticks, okay? As of now, we will be looking into candlesticks because candlestick is the heart and blood of any trading chart, okay? So what we'll be looking at is only candlesticks, and with the candlesticks we'll be looking into the indicators which we'll be discussing in the chart analysis, what we'll be looking at, right? So as of now, the chart patterns which we'll be looking at is candlestick chart patterns, which is there are 6 most common candlestick chart patterns, okay? So as of now, we will be looking at Dojai. So I had asked everyone to understand and give a heads up about what Dojai is in the last class. So has anyone tried what Dojai is? If yes, please type what is a Dojai without looking into the screen which I'll be sharing or the study material which I have uploaded. So if you can share information about what Dojai is, it would be great. Let's be interactive, guys. I don't want me to be, lecturing for 1 hour or 2 hours. I want everyone to be awake. So I want everyone to uh, as of now, Pradeep and Amit have joined today, so they didn't know the question. So another 5 of us, we have the question last time. So I want everyone to type in what Dojai is. Have you made any Google search to understand what a Dojai is? Dojai, Doji, everything is the same. It is the noun which anyone can pronounce it in the way they want. So Dojai, guys, everyone start off. Okay, I have the first answer and from Narendra. Great Narendra. Congrats, you are the first one. Dojai means small trading range with an opening and closing price that are virtually equal. Absolutely perfect. Great. There's an understanding of the rise and fall in the market. Not completely, very nearby. Dojai means open and close of the candle at the same place. Yes, absolutely, Pradeep. Really happy. A doja is a non-trend bar where market participants are undecided. Yes, great. Amit, that was a great answer. Thank you, thanks for that. Doja is a pattern where open and close is almost same. It indicates end of trend. Mm, Yeah, open and close part is correct. It indicates the end of trend. No, it combined with the future candles will decide what the trend will be. So that's what Dojai is. Dojai itself is not a trend setter. Dojai with the further candles is a trend setter. Okay. Dojai is a pattern where open and close of the stock are same. It indicates indecisiveness. Mahendra, that is an absolute correct answer. Abhilash, Dojai means neutral or no significance. Yes, yes, correct. Okay, so I am really happy that everyone has put in their effort to understand what a Dojai is. Yes, absolutely. Almost everyone's answers were correct. Dojai is indecisiveness. It means that the start and close are very nearby and it does not make a huge pattern in candlestick. It opens at the same point and it almost closes at the same point of the day. Okay, so Dojai itself is not a trend setter. It is a continuation pattern. When it happens, what is the next trend will be decided by the candles which go further than this particular dojai, what it shows up in the candlestick charts, right? So over here, let me give you a small example about how the dojai works and what the trend would be further, and how it will how this indecisiveness takes further the markets. Okay, so let me give you a small information about how the dojai plays further. Okay, so dojai means it is consolidation. There is absolutely no way that they know what to do further. It usually happens after a trend. Okay, so usually when there is a trend which has played for past sometimes, the dojai further appears. So this is one of the trends. Okay, so over here, see over here, you will see that there is a dojai which has formed over here. Okay, and you can't mention what is the trend further. Okay, it has been hit by great upside from almost around these levels, which is around this, to the further it has been hit by huge green candles, that is the bigger candles. So it does not know what to do further. It does not know what to do next. That is indecisiveness. It is not a trend setter. Okay, so what happens further in another 2 or 3 candles decides if the trend will be changed or trend will be going ahead of it, okay, or going below that. So over here, see, there was a trend previously which was positive, a huge green candle over here, and afterwards there is a small bit of indecisiveness over here, and here totally indecisive. There is nothing which traders know what to do further. Okay, it does not have anything further to do probably at that point of time. If the market goes much higher, then the traders may go in the positive bias. If the market goes lower, maybe the traders will go lower or they will sell off. That is what will happen over here. Okay, so they are not sure what to do ahead, if they have to take the money back home, if they have to increase the liquidity. They don't know. They have to understand what the trend further is, and afterwards the trend will be set further. Okay, over here, this is a continuation dojai. What happened here is it went higher and afterwards it set a resistance level. So it set a resistance around these levels and it could not cross it for some time. Okay. after the doji happened. So around those doji levels, the market kept on going up and down in between. Okay, so after it goes in an indecisive manner for quite some time, there was not much high or there was not much lows as well. There was a channel which formed in between. There was a sideways movement, and after that, more it went ahead of the channel. It again formed a channel until unless there was this doji over here, which is this doji over here. They did not know what to do further of this. So after this doji, there was upper candles, and afterwards it could not take support right at the level where the previous doji started. It took a small bit of resistance over here. There is a doji over here. Remember guys, these are 20 and 21 day EMAs. That is a very strong support levels for the underlying asset. Usually if there is a 20 and 21 day 20-day close EMA and 21 day open EMA, there is a very strong support at those levels. So check this out. Every time there is a market, when it hits the 20-day or 21-day or 13-day EMA itself, okay, it has held higher, it has gone higher. It has never gone too deep below the 20 or 21 day EMA. Okay, it has always taken support. Over here, when it barred it, it went really low. That was way ahead, way back. Okay, so over here, when it is a bull run, it is a secular bull run. It has been heading higher, and the 20-day and 21-day EMAs have always held as a support zone. Okay, so it held support at the 13-day EMA over here. Okay, and afterwards it went to the 20-day EMA. Over here there is another doji. It went to the 20-day DMA and EMA, and afterwards it went higher. Over here there is one more doji, and that is an indecision after a huge bull run. Again over here, one, two, three, four, five opens which are positive for the market, and sixth one was a doji. And after that, what happened is the market corrected from the highs which it was. It corrected all the way. 21-day EMA or 21 periods. Okay, so 21-day EMA. So EMA means that it is SMA is simple moving average. EMA is exponential moving average. So 20 days, 21 days combined together. This is a question from Pradeep. Okay, his question was 21 periods EMA or 21 days EMA. So it has 21 days combined together. It, when we combine the 21 days open and exponentially divide it exponentially, then the 21-day EMA is when 21-day EMA occurs. Okay, so 21 periods, no, it is not 21 periods, it is 21 days. Okay, this is a daily chart which I have over here. So everything over here is a daily chart. Okay, so this is a daily, not a weekly or a monthly chart. So 21, if you say 21 periods also, it is 21 days previously what has happened. Okay, so this is what over here there's a doji, over here there's a doji. This one showed a reversal. There is a doji over here. After a strong reversal trend, there is a doji. Afterwards the market went up, and it went upper and upper. Over here there was a doji. It did not the market did not know what to do further. It reversed, and it reversed in a big way, and afterwards they didn't know anything further. there was a small uptrend which evolved, and it evolved into a very big one. Over here, after this, there was another doji. Over here, it went down. It took support at 20-day and 21-day EMA. 20-day is the close EMA which I'll be talking about, and 21-day is the open EMI of Nifty which I'll be talking about. Okay, so the underlying asset will always be Nifty, which we'll talk about over here. Okay, so over here you can see the dojis everywhere. When there is a doji, it means that there is an indecision. They don't know what to do further. Okay, so when there is an indecision, anything can happen further. It can be an uptrend, it can be a continuation, it can be a downtrend, it can be a sideways. Okay, so when there is a doji, don't plunge into a market to take a long or a short if you are a investor. Okay, so according to the further candles, if there is anything you have to decide, you can decide. Okay, what is the difference between closed EMA and open EMA? Okay, this is a question from Anant. Okay, so what it means is, I'll show you what the closed EMA and open EMA is, which I'm talking about over here. Okay, so moving averages. Okay, I am looking at the close of Nifty, and it is an exponential moving average. It is a 20-day moving average which I'll be considering. Okay, close is, we'll take 20 days previous to this day's close and exponentially divide it. Okay, so that is what a 20-day close EMA is, and 21-day, it is the exponential moving average of previous 21 days opening. Okay, and it will be the open which will be taking off Nifty over here, and exponential moving average 13 is always a close. Okay, EMA 13 EMA is a very strong support. If that is barred, 21-day EMA. If that too is barred, 50-day EMA. And if that is barred, 100 and 200-day EMA. That is what, those are the strong footholds of any underlying asset as such. Okay, so let's come back to Doji. Yeah, over here there is a long leg doji, there is a dragonfly doji, there is a gravestone doji, and there is a four price doji. It means that it opened at the same place, it closed at the same place. There was no up, there was no down, anything at all. This four price doji. And usually what we'll see is it will be a long leg doji. Okay, so doji is a candle without a body, just a tail. It opens and closes near the same place. So you can see according to what happens over here, that is in the markets, if there is a doji, there is an indecision. What happens further to these candles is the trend setter. Okay, this doji itself is not a trend setter over here. Okay, so let's see what dojis have formed over here. So here what has happened here is a long leg doji, this is a long leg doji, this is a long leg doji, this is, look at this one, which does it look like? Doesn't it look like the dragonfly doji over here? The one here, it's almost a dragonfly doji. This one is a clear example. This one is a dragonfly doji. Okay, so what further, this is a long leg doji. Yeah, this one looks like the 4 price doji. It does not have much of a tail at the top or the bottom. So this one looks like the 4 price doji. Okay, and this one looks like the gravestone doji over here. Okay, it looks like the gravestone doji. Okay, so here let's see near doji group, and here is a hammer, here is a hanging man, and these are the trend setters. Okay, doji itself is not. Near doji group is a trend setter over here. So let's talk about hammers and let's talk about hanging man. So hammer, what it does is when there is a clear downtrend, there are too many candles forming downside of the market, and there is one candle which reverses all the negative it has. So this big candle over here, it says that the bloodiness of the market has been completed. It it actually has reversed all the losses and moved higher. It has moved lower to this particular level, and after it moved to this particular level, what it does is it reverses all the losses, it gains further. Okay, so that is what it means. Let me show you what I'm talking about over here. So this one over here, this this full thing over here, it is the body of the tail. It has such a big tail, and afterwards it reverses all the losses. It goes ahead, and after it goes ahead, what it does is it actually goes higher and higher. Okay, over here, over here what happens, it is a hanging man. Okay, why is it called a hammer and a hanging man? So just that it looks like it has a top over here, it has a handle over here, it looks like a hammer. Okay, this looks like a hanging man because if a person is hanged, what happens, his head will be over here with a, if someone is hanged, what happens is his head will be covered by black mask, and afterwards he will be hanged, right? So at that point of time, what happens, this is black and the rest is his body, so it is hanging, the body is hanging, his head is black, so that's one of the reasons it's called a hanging man. Okay, so this has okay, so hanging man always happens when there is a huge uptrend, and hammer always happens when there is a huge downtrend. And if the other thing happens, it does not have much of significance. Okay, it may happen that in a strong downtrend there is a hanging man pattern. Okay, however, it may not be a reversal pattern as such. However, it may be a slowing down of the bear run what has occurred. Okay, so in the uptrend as well, there may be a hammer pattern which formed. However, there may not be much significance when it is in a strong secular bull run, when a hammer happens. Okay, it may be a continuation, however it actually is not a factor which will take the market down. Okay, so that's one of the things which you have to know. All right, so over here what we'll go ahead with is, okay, so and further we will see how to recognize the criteria. So the long shadow or wick is about 2 or 3 times the real size of the body. So this should be long. This should be long enough to understand that it actually is a hammer. Okay, so let's check the share prices over here. These are the indicators over here. Okay, so let us try verifying what is a hammer over here, what is a hanging man over here, and let us verify if it actually plays any role over here. Look at this. Can you check this out? This one over here, it looks like a hanging man. It is twice the length of the body. It has twice the length of the body, so it has a hanging man pattern. Okay, so what happened over here, it has a very secular bull run. So when the hanging man pattern happens, it will be be succeeded by lower lows, and as soon as the hanging man pattern happened, there are kind of two dojis, which means that hanging man pattern is probably not suggesting there is a clear reversal as such. Okay, in a secular bull run, that's what happens. It may move into a side market, or it may move sideways. Okay, so that's what usually happens if it is a very secular bull run. And if it has, look at this, at the last one shows that it is a hammer pattern. When it is a secular bull run and you see a hammer, what did I tell you? When you see a negative trend and there is a hammer pattern, it is a reversal pattern. When it is a positive trend itself, there is no significance of hammer itself. Okay, so there may be further upside, that's it. However, it does not decide anything as such. Okay, so this one is also almost like the hanging man. However, there is a wick at the top. It is twice the body length of the wick below. Okay, so the tail is almost twice the length of the body. So it is usually a decider if it goes sideways or it goes higher. That's what will be deciding when such kind of hammers or such kind of hanging mans happen. And such kind of hammer happens in a bull run, it does not give any suggestions that it will continue the pattern or it will reverse the pattern. Okay, so the long shadow should be 2 or 3 times the real size of the body. Little or no upper shadow or wick. As I already told you, there is a very little, which was the one we were talking about, this one, look at this, guys. There is a hanging man over here. There has been a secular bull run. There has been a hanging man over here, and afterwards the market fell to the level of 9,050 or such. So when did the hanging man happen? Almost around 9,200 levels. So around 9,200 levels, yeah, 9,205 levels, the hanging man happened, and it closed at 9,205, and afterwards there is a reversal of pattern. Okay, so you have to see if it actually is going in a reverse order, or if it is going in if it is a continuation pattern, or it may go sideways. Okay, you have to, it is not 100% secure one which you will consider as the trading one. Okay, so there are other indicators which you have to consider with the near dojis, a hanging man or a hammer, to verify if it is a negative trend or a positive trend, which, or it is a reversal. Okay, if it is a continuation pattern, reversal, whatever it is, the real body is in the upper third of the trading range. So it should be in the upper third of the trading range. It means that, so over here, let us draw a Fibonacci series chart here. So it has to be in the upper third of the range. So this is the range. Okay, so this is the range. It has to be in between these. So in between these, if there is a wick which goes right to the 50%, it means that this trading range cannot be considered. Okay, it has to be in the upper third. It means that if we divide it 1 2, and this is the third part. It should be in between these. If it goes to the 50% range, it is not considered as the pattern. Okay, so the color of the real body is not important, though the white body is more bullish than the black body. Okay, so over here, I told you this is a hammer. If it happens in a bull run, it means that it is bullish. Okay, it may continue the pattern, however it does not signify any reversal, or it does not signify a very secular bull run as such. Okay, so the hammer is a bullish reversal pattern which forms during a downtrend. As I already told you, just because you see a hammer form in downtrend does not mean you automatically place the buy order. You have to consider the further candles, what happens ahead of this, and after considering the further candles, you will be able to decide that it is a clear trend which has emerged as of now. You need to have more bullish confirmation before it's safe to pull the trigger. Okay, so never ever just decide on one indicator as such that the trend has reversed. So there has to be confirmation of 2 or 3 trades ahead of the dojis, and that is what forms the bullish or bearish reversal patterns or continuation patterns or anything as such. Okay, so the hangman is bearish, whereas the hammer is bullish. So this is the candlestick of a hammer and close above the open and of the right side of the hammer. Okay, so after this closing, there is a opening of the next candle, and it is out of range of this particular doji which has formed nearby doji, which is a hammer pattern. It has formed ahead of the hammer, which means that it is showing a clear reversal pattern. Okay, and or check for the 5 alarm trade. So it means that if there is a continuation of this trend, it means that it will have at least 5 of the candles which will be going ahead of this. It will not touch this hammer itself. Okay, it will not come back over here. It will not touch this. It has to go higher, and it has a range somewhere in between. Okay, the hammer and the hangman should give you heads up that the market is slowing, or maybe it is showing a reversal pattern. Okay, so there is something brewing in the market, however it has not been decided yet. Okay, there may be a reversal. There is something happening in the market, which means that the market is showing some signs that it is exhausted, or it has to continue the bullish pattern, or it has to continue the bearish pattern. Okay, and Anant has one question. What does what does the width of candle indicate? Okay, so a width of candle, what it indicates is it if there is strength of bulls or strength of bears. That is what the width of candle suggests. Okay, so if there is a hammer to be formed, when will the hammer actually form? When the bulls have taken over the market. So they are showing that we are here to stay. We have started reversing your order of negativity. We are starting your reversal pattern to a positive note, and I am here to stay, and I am here to buy, and we have entered the market. We are securing the market with the run ahead of us and not ahead of you. Okay, so that is what it means. So what it means is it is the width of candle shows you what is the trading range. If actually the bulls have secured the market correctly, or it is just like any doji which is which shows no reversal patterns or anything like that. It may be an indecisive pattern. If there is a huge wick, if there is a huge width in the candle, it means that there is a big trading range, and bulls or bears, if it is a hammer or a hangman, if the bulls or bears have their foothold strong enough over there. Okay, that is what it means. Hope I have answered your question, Anand. Okay, so the hammer and the hangman should give you a heads up the market is slowing and maybe setting up a reversal. Okay, almost always goes in the direction if opens on the opposite side of the wick. So hammers, yeah, if it opens, this is the wick. If it opens higher, the market will go higher, and tails usually represent a reversal except when the reversal covers the tail. Okay, this is what it means. Tails usually represent a reversal except when the reversal covers the tail. Okay, so it means that there is a huge reversal of sorts, and bulls take a great run and it moves ahead of the reversal. Okay, so it is no more negative, it is positive now, and afterwards bear should not return in the same candle and come back and sell it and cover the whole wick. When that happens, it is no more a hammer or a hangman as well. Okay, so the tail should be very representatively legible, and it should be showing up in a good way, in a good manner, at least 2 or 3 times of the body of the candle. Okay, only then the hammer or hanging man will be taken into consideration. If not, it is not. So tails usually represent a reversal except when the reversal covers the tail. So this reversal itself should not cover the tail, and the bears should not return in the same candle and cover everything off. That is what it means. So this is again an inverted hammer or shovel. So inverted hammer occurs when the price has been falling, suggests that the possibility of a reversal. Again, that itself don't have every. Okay, Narendra has a question. In what time frame should we observe these candles? Okay, so Narendra, I have not come to the the uh, time frames as of now. So consider it as a 1 minute time frame. Okay, as of now. I will show you the 5 minute time frame as well. However, let's consider it as 1 minute time frame only. Okay, as of now. So inverted hammer, uh, it it is it occurs when the price has been falling, suggests that possibility of a reversal. So there is not much that the bulls could do. It went to the low point of the day. It started high, and I mean it started low. It went really high. Market could not sustain it. Bears came, and afterwards, they sold off all the greatness which bulls had taken. So it started low, it went really high, and afterwards market could not sustain. The bears came and they actually came again. The market came down again. Okay, so that is what it means. This may be a continuation pattern, or this may be a reversal as such, when it is a bear market and it is a inverted hammer, and when it is a bull market and a shovel, it means that this may be a reversal pattern to negative. Okay, shovel shows up at the high, I mean when the shovel shows up at the high point of the uh, price action, it means that it is a reversal pattern. However, this itself is not a deciding factor. You should see the further candles and only then decide it. Okay, so there is a reversal potential. Okay, so next let's go to the engulfing candles. So bullish engulfing and bearish engulfing. These days, bullish engulfing and bearish engulfing is not something great that we will be considering. Okay, so there will be a bullish engulfing now, and afterwards it may show up. Afterwards it may show up with a bearish engulfing, and afterwards the trend which has already formed will reverse. Okay, I'll show you one thing over here. Okay, so look at this one over here. This one shows as this one right over here. This one right over here, it has a bullish engulfing pattern. There was a sideways move. It took the previous almost about five candles previously. It took everything and it went more ahead of all the candles above, right? So what it did is it engulfed all these candles and it went ahead. And look at the next chart over here. So the whole engulfing what the positive candle took, there is a negative candle which engulfed all of a sudden. There is a really huge engulfing candle of red. It means that the trend which it had set previously, that trend reversed. Okay, so it was a positive trend, and afterwards there is a negative bullish engulfing, the bearish engulfing candle, and this one is nullified by this one. Further what happens is taken care by the further candles, and when there is a confirmation that there is a reversal of trend, you have to take a reverse trade. Okay, so over here there is a bullish engulfing. Once it has almost covered two or three and it has went ahead and the market moves higher over here. This is a bullish engulfing pattern, and afterwards there is a bearish engulfing pattern. What can you do over here? You have to take further candles into consideration to go ahead of this. There is a bullish engulfing. Look at this red over here. This is a shovel. Okay, what happens in the shovel, it usually has to happen at the top of the market and the market has to go down. What happened over here? There is a bullish engulfing pattern, which means that there is no negativity as such. There is a positivity which is gulping up, and afterwards there is a bullish reversal, the bearish reversal, and afterwards there is further ahead of what is happening, the bullish engulfing and bearish engulfing. The market is moving ahead of it. So this one positive got nullified by the negative, and afterwards the usual trend continues. That is what happened over here. Okay, so that's what I told you. If there is a bullish engulfing and a bearish engulfing at the same point of time just next to each other, it means that the bullish engulfing did not give any suggestions that the market may move up or down. Okay, so it means that it is nullified. Okay, bullish engulfing, yeah, so it has to take the previous previous candle. It is where the body of the current candle completely swallows the body of the previous candles. Yes, it is either one of the previous candle or it is three to four of the previous candles. In the example which I showed you, there are five candles which was covered. Okay, afterwards there was a bearish engulfing pattern again, which means that So which means that a there is not much of a reversal happening, or there is not much of a continuation happening when there is a bullish engulfing and bearish engulfing at the same time. Okay, so I have already given you hints about what bullish engulfing is. Bearish engulfing is just the opposite of it. It means that there is a bearish candle which happens over here. There is a bearish candle which takes the previous bullish candle over here. Check this out. This has taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Yeah, 12 candles. The previous 12 candles, whatever has formed, the bearish engulfing candle has taken down everything, these 12 candles completely. So it means that it is a start of the bearish pattern, right? So until it comes to uh, the positive support, it may go down. Okay, that is what happened over here. It came to the support zone, and afterwards it took support over here. After this bearish engulfing, it it is somewhere around 9,629, and it came up to 9,621. So it about 9 points down after the bearish engulfing showed up. Okay, so this is what happened over here. So let's move to the next one. If you have any questions at all, please interrupt me. Okay, I am going a bit faster because we have to cover much more as of now. So if you have any questions at all, please do stop me in between. Okay, so tweezer bottoms. Yeah, tweezer bottoms usually happen when there is a market reversal. One of the most often misunderstood pattern. Yeah, that's because usually people don't understand what it means. So if they have to take a bullish stand or a bearish stand, because almost both of it looks exactly the same, other than having the color. The positive one and the negative one looks just like each other. Okay, does not matter if there is a wick or not, it has the position of the bodies next to each other. So if there is a wick above this or below this, it does not matter. Only the body should be at the same position of each other. Okay, so if there is a reversal candle over here, this is a red candle, this is a green candle, both of it should have almost the equal body. Okay, that is what the tweezer bottom or tweezer top means. So when there is a tweezer bottom, it means that it is a bullish pattern, and when there's a tweezer top, it means that there is a bearish pattern, or it may be a reversal pattern. Okay, patterns are footprint of what has come before. So if it is a positive one, a positive market over here, it means that there is a reversal and it may go to negative. And if it is a negative market, previously suggested negative bear run, it means that it will go higher. Okay, that's what it means. Tweezers are dual candlestick reversal patterns. This type of candlestick pattern could usually be spotted after an extended uptrend or a downtrend, giving heads up of reversal which may happen soon. If it happens, you will understand that it is happening. Okay, so the first candle is the same as the overall trend. If the price is moving up, the first candle should be bullish. If the price is moving down, the first candle should be bearish. Okay, so the second candle is opposite of the overall trend. If the price is moving up, then the second candle should be bearish, and if the price is moving down, the second candle should be bullish. Okay, so the shadows of the candle should be of equal length. So this is what it is. So the top and bottom of the body should be equal at the same point of each other. That is what the tweezer tops or tweezer bottoms means. Okay, these are the inside candles. So inside candles usually means you are going to move against the grain. Inside means it opens inside the body of the previous candle. So inside up candle formation is a trend reversal pattern that is found at the bottom of the downtrend. It indicates that the downtrend is possibly over, that is a new trend has started. Okay, usually inside candles and outside candles makes a lot of difference. Okay, so I will show you what an inside candle does and what an outside candle does. So inside candle, I probably can give you some example over here. Look at this inside candle. Okay, look at this inside candle. So over here at the candle is inside this body of the candle. So it has not gone much below or much above this. It is inside this particular candle. It means that it is giving you a reversal as such. Okay, so there is something which is brewing in the market, which decides that it is reversing. It is inside of this particular body and it is reversing. Okay, that's what happened over here. So this one as well, look at the body over here. This is inside this big candle. Okay, so this is inside and afterwards the market moved higher. So that's what is an inside candle. Okay, so the body should be inside this body. That's what it means. And an outside candle, this is a chart which is on 16th of last month. Okay, so 16th of last month there was a outside candle which happened, and after that what happened I will show you. So this is an outside candle which occurred on 16th of May, and I was Narendra has question. Could you let me know how to identify? Okay, Anant has a question. Sometimes I find it difficult to distinguish between a dojai and a hammer or a shovel. Okay. Could you please let me know how to identify? Okay, Anant. Okay, no problem. So a shovel, what a shovel means is there is a reverse, there is a negative body and there is a big wick at the top. Okay, shovel is that. When there's a very small body just like this, look at this over here. Look at this over here. It means this is a dojai. Okay, this is a dojai. So both these are both these are dojais. Okay, so if we go all the way up, okay, so if you consider this dragonfly dojai, doesn't it look like the one over here to the left? Doesn't it look like that? Can you identify that it is a dragonfly dojai? Yeah, this one right over here, it looks like a dragonfly dojai. Doesn't it look like that? Look at it over here. What you see over here and what you see over here, doesn't it look same? Doesn't it look similar? It does, right? So that is one of these. And let us consider this one over here, long-legged dojai. Okay, one over here. So the one over here is long leg doji, which we will be considering. Look at the top, there is a wick over here. Look at the bottom, there is a wick over here, and there is a very small body over here. It means that this one looks alike of the one which we see over here, that is a long leg doji over here, right? Doesn't it look similar? It does, right? And we'll check how. Okay, what is the next question? Could you let me know how to identify hammer or a shovel? Okay, all right. So a hammer or a shovel, let's take this pattern. Okay, where is a hammer? Where is a shovel? So over here, where is a hammer? Look at this looks like a hammer over here. Okay, however it does not have a big one. It should have at least two times the body. This one is a hammer over here. The last one is a hammer. Okay, it has almost twice the I think it is just one. So this one, if it had a big wick to the bottom, this would be a hammer. Okay, look at this. This is kind of a good example, not the best, however kind of a good example uh, in for a shovel. Okay, so what has happened here is it has to have at least twice the body of twice the length of the wick. However, it's okay as of now, just for the purpose of showing you, it is a shovel. Okay, if it had a big wick, it means that this is a shovel. So let us see when shovel comes into picture. Okay, when there is a continuation of a bull run, if a shovel shows up, this is a bear run over here. Okay, shovel had showed up, and afterwards there is a indecision about what is happening. So if the shovel had showed up right over here, it means that the market will go down. However, it is one of the indicators that it will show the market is going down. 2 minutes, let me grab a cup of water. Okay, so Anand says that he got it, and Narendra has a question. Oh, Narendra is giving us information that it is also called as harami. Okay, so this inside candle is also called as harami. Yeah, usually, you know, there are users who hate saying harami. Okay, so the word harami was taken off from the trading words, because some of them who are trading, the traders over there in US, thought that it is kind of offending for them. Okay, there are traders who are okay, Mozis, Muslims, uh, those people thought that harami is a wrong word to say, and they should not be saying it. So inside candle is the only thing it will be called as of now. Harami is taken off from the trading journal. Okay, and Narendra, thanks for letting us know. However, now it is only called as inside candle. It will not be called harami. Okay, this was done in around 2015. So in 2015, uh, yeah, yes, it is called as harami as well. It is inside candle. There are bullish haramis and bearish haramis. Okay, so that's what inside candle up and inside candle down. So bullish harami means that it is a positive one, and bearish harami means that it is a negative one. So in 2015, they removed the word harami from the uh, trading journal of US. Okay, so now it is internationally not accepted. So that's the reason they stopped calling harami. Okay, so now it is called inside candle and inside candle up and inside candle down. That is one of the reasons I have not noted as harami, and I used to call it as harami. It was a very clear way how to remember an inside candle. Inside candle does not uh, blow any bugles as such. However, harami does. It is very easy to keep in mind. However, if you have to keep it for yourself, remember it as harami. No problem as such. Okay. So if you have to teach someone, don't give out harami as a name, because there are people who will get offended by this. Okay. All right. So having said that, inside up candle formation is a trend reversal that is found at the bottom of the downtrend. It indicates that downtrend is possibly over and new uptrend has started. Okay. So whatever I am teaching over here, sorry, sorry guys. Okay. Whatever I have taught over here, none of them singly is considered to be a trading indicator. Okay, it has to be combined with others in order to verify if there is a reversal as such. Okay, same with the outside candle as such. Outside candle, this happened on 16th of last month, and I was making a note of all my trades, and this was somewhere around 10:40 or so. I was going for the breakfast. I had a short on the market. I had a short on the market. I was short on the market. I had taken. Uh, I will be teaching you three of the strategies, right? One of them will be the trend strategy, which almost guarantees a 75% chance of hitting the target. So if it does not hit the target, it means that we have hit the stop loss. So that is what it means. Okay, and it is 75% of the times true that we will hit the target. Some of the times we will miss as well, because market does what it has to do, and we will not be able to control whatever market is doing. So over here I was bearish. I took a put at this point of time. As and when there is a outside candle which formed over here, all of a sudden there is a change of the trend. What happened next, I will show you what happened next. So this is what it means. It means that it signals there is a trend reversal. This was a huge trend down, and the market, it is the break even point over here. Okay, So this was at the highs. It moved down, downer, and it moved below the break-even point. And after it moved below the break-even point, market all of a sudden took a reversal. So this was a negative candle and it took a reversal, and it reached the break-even point. Almost it reached the break-even point. This is a outside candle. What it means is when the bar is both higher and lower than the previous trend candles and it falls outside the trading range of previous candles, it means that it is not even nearby to any of these candles. Okay, its top is right below the bottom of the previous candle. It has not hit any of the candles which previously was it has not hit any of the candles nearby. So it is outside over here. It is completely outside the range of the previous candles, and its top and the bottom is outside of this candle, previous candles, all these candles. Okay, and afterwards what happened, it reversed, the market reversed. So at this point of time I squared off somewhere around this point. I squared off, and afterwards I took a call as a trend call. Okay, you have to make the decisions when there is a reversals like this. Okay, and afterwards what happened, after this happened somewhere around this zone over here. It happened over here, and after this what happened, the market went into a sideways zone. I squared off somewhere around this zone. I took a call. Market went into a sideways zone, and afterwards it went right ahead, and it went up and away. So it touched 9,525 this day, guys. So when did this happen? It happened somewhere around 9,460. So 9,460 to 9,525. Look at the power of this outside bar. So what it did is it made the market change its direction, and Nifty rose by 80 points. Check this out. Nifty rose by 80 points, and I squared off somewhere around these zones. At these zones, I thought that because there is a very clear uh, it rose to 9,505. However, I was in a feeling that 9,500 itself is a great resistance zone. Look at the way market scaled off over here. Over here, it showed a huge up move after it took support. After the resistance, it took support at the resistance zone, and afterwards propelled higher and really higher. 9,500 is considered as a resistance zone. However, look at the candles over here. There is no red candle at all over here. In this zone, there is no red candle at all. Look at this from here. It took support at the 20-day close EMA, and afterwards it propelled higher ahead of 9,500. It touched 9,505. It means that it is such a huge upside move, the huge liquidity driven, that it didn't care about 9,500 as a emotional resistance zone. It went ahead of it. So sometimes what happens when there is an emotional resistance zone, it is good that you square it off. It may move higher if it has a clear, a huge uptrend possible. However, at these points, it is good that you square off, because you never know, the market may go really down from those levels as well. So usually around, if you remember, around 8,000 no 9,367, market had went to 9,367 levels previously, and it had never crossed it. The time frame is 1 minute chart. Okay, so the market had never crossed 9,300 levels, and it never had touched those levels. Now it has scaled 9,367, and now when it goes down, 9,367 levels becomes support. Okay, so it took such huge supports. When it goes above this 9,505 levels, and look at this, it almost came to 9,500 levels. It almost came to 9,500 levels. However, it was a point or two lesser, and afterwards it went more higher. Okay, so this is what it did. So when it is near the emotional zones, it's good that you square off. You never know when there is a reversal. It will be a huge reversal, and it will be a sharp one. So it is better you square off around those zones. However, if you have the foothold, if you are already on 50 points up move, then you can put a stop loss around these lows, and afterwards trade secularly ahead. However, I just squared off around these zones. So that is what is an outside candle. That is what an outside candle can do to the market. Okay. So what happened later? Nifty rose by 80 points. That's a great up move. So we have one more to cover today. So we will go ahead with the next one. So we'll take the candlestick strategies. Okay, these are the strategies which you will require for my trading strategies. Okay, these are the indicators which you would require. So I have given hints about how you can take these strategies and trade it. However, this is not the complete trading which I will be teaching. This is just hints about what will happen with these particular indicators in turn. Okay. Over here I have given all the study material. I have mostly not just given you stale information about what you have to learn. However, it is updated study material, and it is with live things which I have traded with, and live things which has happened in the market in about last 1 month or so. Okay, so everything is updated to date, till date. If it is applicable 5 years back, it is applicable today as well. Okay, so everything is up to date. You don't have to worry about any study material being stale. Okay, so I will be teaching you 6 indicators. I have already talked about the 20-day Nifty close EMA and 21-day. um, Not much about Fibonacci retracement. However, about the support zones and resistance zones and the trend lines, how to draw the trend lines, how to draw the support zones, resistance zones, Fibonacci retracements, what plays in Fibonacci retracements, what is important, what is not. I will tell you everything about all these 6 indicators which I'll be talking about. Oh, here. Yeah, let's take the 20-day Nifty close EMA. So if you have to take, I will show everything in the charts, so don't have to worry about it. Okay. Okay, my screen was locked because if I don't touch this for about 5 minutes, it will lock itself. So this is what you have to do here. I have started it. I will delete it. I'll delete all the indicators which I have now. Okay. I I have deleted all the indicators here. What we'll be doing now is we'll go to charts, and we'll go to EMA, and we'll set, this is what the close is. Okay, so the close means that the Nifty close, previous Nifty close or 20 days. 20 periods means 20 days. Okay, so 20 days close will be considering it, and we'll apply this. Usually I'll keep this at red to make sure that red goes higher than 21 day uh, open. Okay, so if 20 day close is about 21 day open, it means that it is a bullish pattern. Okay, so I differentiate it that way. So I'll usually keep it at red. When red is high, it means that market is in positive zone. Okay, market is in bullish zone. That is what it means. Okay, so 20-day close, I will apply it. So this is what it is. So it if you can observe, there is a clear uh, there is a support over here. It took support, it took support, it took support. It when it went down, it became a resistance zone. It tried touching this. It tried going higher. It tried going higher here as well, here as well. However, it went higher. However, it could not sustain. It came back, and afterwards, when it came higher, it propelled and afterwards took support around these 20-day EMA itself. Okay, so 20-day EMA is a support zone or a resistance zone when it is lower. Okay, and let us consider 21-day. So all these whatever the 20-day, 21-day, everything is a strategy which I have formed, guys. So um, it may not be the actual market indicator. Okay, and not everyone teaches this. This is one of the strategies which I have learned from my mentor, how to create a strategy for ourselves and trade, and this is one of those. Okay, so 21-day. So this is back tested. Everything whatever I am teaching over here, it has back tested. Okay, so over here, if it is moving higher, look at this. There is a crossover uh, at this zone. So there is a crossover line, and there is a, we'll draw an ellipse, and there is a crossover over here. What is the level it crossed at? Let us check it. So around these levels, 9,600, let's consider 9,626. So when it crossed over here, when it went to the negative zone, it was 9,640. Okay, so 26 to 40, you have already made around, yeah, it is around 40 levels. Okay, you have made almost around 14 points right over here when you buy at this line, and when you sell at this particular line, when there is crossover of 20 and 21. So when 20 is higher, it means that it is bullish. When 20 goes 20 day EMA close goes down, that is the red as of now. When it goes down, it means that it is in a negative zone. Okay, so it is going down, and afterwards there is a crossover again over here. Okay, so if the market is doing a crisscross like this, it means that it is moving higher and higher. That is what it means. Over here, it again crossed, and afterwards it crossed somewhere around 9,632 levels. There is kind of a cross over here. It went into a sideways zone, and the continuation happened, and afterwards, what is the level it closed at? It closed at 9,670 68 levels. Okay, it closed at 9,668 levels. And when did we see a crossover over here? Over here around 9,632, 32 till 68. So you have made almost around 36 points, just by following this one indicator. Okay, your heart must be thumping that. Okay, I have an indicator, let's start trading. This itself is not a single indicator as such. Okay, so this is one of the indicators which I will be teaching you, and 20-day and 21-day, it is really a a really great indicator which usually most of them don't follow, because it's not back tested by everyone. Okay, so I have back tested it, and it is a very good indicator that market will go down or market will go higher. Okay, though it goes into a sideways market, how much will you be losing? Let me give you a small example of this. It is going in a sideways zone. How much will you be losing? See, there is a reversal pattern over here. It is somewhere around 9631 as such. Okay, so let us see when it reversed again. So over here it reversed somewhere around these zones, 9627. 30 to 27, how much did you lose? You didn't lose much, right? So however, and so from 30 you almost made around 3 points. You still gained, you didn't lose anything as such. Okay, when it is in a sideways zone also, you will not be losing much. However, you will not be gaining much as well. In sideways market, usually it will be moving crisscross. Okay, so over here as well, there is a crossover somewhere around 9632 levels. There is a crossover, it went down, and afterwards it crossed again over here around 9627 levels. Okay, so that's what it is. You made some money, however it is not big. Okay, you may not see much of a movement in options. It may be about 30 to 50 pairs which you'll be seeing the movement in options. When it actually gives a bigger move like this, you will be making really huge money. So there is a continuation pattern as such, and afterwards it is continuing higher, though it crossed over here, and afterwards probably you booked it over here, and afterwards what happened, it crossed again over here. After a secular bull run, it is going higher, 9632. It went higher to 9668. So it went really high. Can we make an alert in Zerodha using the crossover just to ease the process? I am not sure about Zerodha, Pradeep. I don't have a Zerodha account, and I personally don't have a Zerodha account because I have a much better account where my trading brokerage is taken care in a monthly. Okay, so I can trade infinite options at 125. So if needed, I can give you the link of opening the account. Okay, so I have no idea about making an alert in Zerodha. So when there is a crossover, it means that you have a bullish pattern. If there is a 20-day crossing the 21-day, it means that it is bullish. Okay, right. Let us consider 6 months. Hope it shows up. All right. Look at the monthly charts. Okay, so this is a six month chart. So everything over here is a daily chart for 6 months. Okay, there is a daily candlestick. Look at the way how this 20 and 21-day moves over here. Okay, so let's zoom in a bit. It crossed right over here. Okay, somewhere around these zones, 8160. It is moving higher. It almost had a crossover, however it did not. It is in a continuation zone. It is in a continuation zone. Above, it crossed over here. Okay, So what is the zone over here? 8,800. Okay, I just leave 8,880. However, it is 8,800 in between over here, so it is 8. Let's consider 8,800. So how much have you made if you had followed this particular thing, 8,160 to 8,800? That is a huge run, guys, if you actually consider this. So let us see. So over here it had a crossover, and afterwards there was a crossover here, and afterwards there is a crossover here. And when there is a crossover, it is around 9,100 zones. So 9,100 zones. Yeah, no, not 9,100, around 9,330 zones. There was a crossover again. Okay, so over here there is another crossover, 9,400. There is a crossover. Now the market is at 9,668. Almost 220 points is the gain over here when there is a crossover. Okay, if you lose also, you will not lose much. Okay, it will almost be at the same levels which you will be losing. Okay, so if look at the, you can't make out it is very meager change over here. There is a cross over here, a cross over here, and cross over here. Let's consider this. There is a crossover here, and how much did you make out of this? Somewhere around 9,300, and let's consider, let's say 9,350. Okay, so around this there was a crossover, so you bought it. And how much did you gain out of this? 9,360. 9,000, let's consider 9,370. You have not lost much as such. Okay, over here also, over here there was a crossover here around this zone, 9,150, perfectly at 9,150. It went down and it went up again over here. So okay, you can notice somewhere over here 9,160 probably. Okay, so though you have lost, check this out. It is right over here. It crossed right here, that is 9,150. When there is a crossover, 9,160 over here. Okay, you can make out over here. So 9,160, it means that whatever you lose with this particular thing, it will be very less which you will be losing as well. Usually you'll not be losing with this. However, if you lose also, it is very meager amount which you'll be losing. Okay, that is what it indicates over here. So this is the 20 and 21. Okay, we are almost running out of time, and I will go a bit faster. Let us consider the third strategy, strategy, that is the Fibonacci retracements. This is the mother of all. Okay, so okay, over here I have given you example about 20-day and 21-day. When there is a crossover 930, it is a buy, and over here that is a sell. You have almost made around from this particular zone to this particular zone, you have made around 10 12 points. And over here reverse is true as well. When there is a short over here, if you had shorted the market right over here, when there is a reversal, then at 9,491, you could have gained 9,428, which is the low it made. However, it has not yet crossed. Okay, you are still in profits. What you have probably a long run to go ahead. Okay, it is still down. Okay, so it went down and it is still downer. You will still see down moves probably. Okay, so this is what it means. So this is an example of 20-day and 21-day crossover. So Fibonacci retracement, this is the mother of all. I'll probably give about 5 to 10 minutes only for Fibonacci retracements. How to draw Fibonacci retracements. I want everyone to help me out. If you know how to trade, or if you know how to draw Fibonacci retracements, how many of you know and how many of you don't know? Please let me know. In the meantime, I'll be continuing with the Fibonacci retracements. Fibonacci retracements is, okay, Anand doesn't know. Fibonacci retracements is the addition of the previous numbers. Okay, so 1, if you consider 0, plus next number is 1. 0 plus 1 is 1. So 1 plus 1 is 2. 2 plus 1 is 3. 3 plus 2 is 5. 5 plus 3 is 8. So it keeps on going like that. Okay, so that is the Fibonacci series, and that is what we'll be drawing on the charts. Fibonacci series is actually support or resistance zones, guys. This actually, it is almost around 75 to 80% true. When it hits the Fibonacci retracement zones, it is sure to either take a support or sure to take a resistance at those zones, those particular zones. Okay, the main zones which are very important is usually market starts showing a movement or reversals around 10:30 to 11:30 a.m. So look for resistance or support zones at 61.8%, 76.4%, 91%. You don't have to memorize everything. Everything is based on chart, and everything will be available on the chart itself. I'll show you what it means. Okay, let's do a quick rewind of the answers. Okay, Pradeep forgot. Abhilash, no, he doesn't know. Amit, I know but have my doubts. Okay, and Indranath, don't know to draw, and Narendra, don't know. Mahendra Singh, don't know. Anand, don't know. Okay, all right, so we have a clear winner, that most of them don't know how to draw Fibonacci retracement, and most of them don't know how to trade with Fibonacci retracement, as you don't know how to draw as such. Okay, so basically it means that Fibonacci retracements is the zone where it takes support or resistance. Okay, this was found out by Fibonacci, who himself is a stalwart in maths, and he found out these Fibonacci series, and based on that there is a indicator in the market. Okay, so Fibonacci retracements makes a lot of difference for the support or resistance zones in the market. Okay, so let's draw a Fibonacci retracements high to low of this particular chart. Okay, so I'll go to line studies and go to Fibonacci retracements. It depends on your chart how it will be going ahead. Okay, if I want to take up to down, it will be up to down. If I want to take bottom to up, it will be that way. Okay, if I take bottom, it will be 0, and if I take the top, it will be 100. Okay, so if I touch the top and leave, this will be the high zones, and this will be the low zones. Okay, so from this to this is what I'll be considering it. Okay, so from this level, which is the 0 level, if the market has to go up, what it does, it has to move from the low point of the day to the high point of the day. After it moves to the high point of day, I will let you know what happens. However, so before it moves to the high point of the day, it has to cross all these hurdles. Okay, all these hurdles are supposed to be resistance zones. Okay, when it is moving higher, it is a resistance zone. When it already crossed this level, it means that it is a support zone. It is just like a roof. Okay, so if you have a trampoline and you propel up from the trampoline to the roof, you go and hit the roof, and you'll just hurt your head. You will not be able to move higher because roof itself is a resistance for you. You can't move higher than the roof. What you can do, you can probably put a ladder and afterwards take a drill. You will drill in the roof, and afterwards you can't drill very big because the roof will fall off, so you will drill a small hole. You will try moving higher than the roof. It means that after moving higher, roof itself is a support for you. You will be standing on the roof itself. You will not have demolished the whole roof. You are just digging a small hole in the roof and you are going higher. It means that you are still standing on the roof, which becomes a support for you. That is what all these levels are. This is kind of a roof for the stocks to go higher. Okay, these are the hurdles. When it is below these levels, it is a resistance zone. When it is above these levels, it is a support zone. So over here, if you consider, it came down, it went up to this level, that is the 61.8 level, which is one of the greatest support or resistance zone. It went to the 61.8 level and it came down to the 76.4 zones, and afterwards it took support, it put the ladder, it went higher, it dug a hole in the roof, and afterwards it went higher. And afterwards what happened is, resistance, this roof has now become support. It came near the 61.8 zone, it took support, it went higher, it went in a small slow sideways direction, and afterwards it came back to the roof, it stood on the roof, and afterwards it propelled higher and higher. It touched the high of the day, and usually break even points, that is when the market goes down, when it is a negative, the break even point when it comes to zero level, it is a resistance zone. Okay, and over here the high point of the day, that is called as the highs of the day. When it has to breach that high of the day, that is the open range, that is again the resistance zone. So over here, this zero level is the resistance zone, and it is near to the break even. It went down from the retracement level, the top of the retracement level. It went to 38.2%, and afterwards it took support, and afterwards look at this, 38.2% has been a hurdle for a very long time. When it is going sideways, it has been a hurdle for a very long time. It couldn't cross it very decisively until it crossed decisively. Now it has become a support zone. It now came to the 38.2 levels, and afterwards propelled higher and higher, more higher. Okay, this is what happened yesterday. Okay, so when it broke this break-even level again, that itself becomes a support. Okay, when break-even is broken, it becomes a support. However, not always when you have to check, not probably if you dig a hole in the roof and afterwards try to try to propel higher, and afterwards you jump down to the roof and you jump to the level where you had dug a hole, probably you will come down, right? So that is what happens sometimes. If it hits the roof too many times, it may fall as well. Okay, it if takes support when there is a huge liquidity driven market. Okay, when it hits the roof again and again, if you keep on hitting where you are standing, you may fall down. If you are hitting by a hammer on the roof again and again, okay, it may collapse. So that is what may happen. However, at this point of time, break even has been a resistance previously, and now it became a support, and afterwards it propelled higher. Okay, so Fibonacci retracement levels of 61.8, 76.4, 91% are very important. Okay, so usually those are the support zones. Look at this over here. It went really high and afterwards came down to 85.4 levels. It came down to 76.4 levels. It came down to 61.8 levels, and afterwards it came down to 38.2 levels, and afterwards it propelled higher, right? So the resistance zones become support zones after it climbs ahead of it, right? So this zones 91% is a strong support. It may not have happened over here. If it comes down, it will usually take support at 91% zones, and 76.4 is a crucial support for markets, or crucial resistance as well. So usually it is a crucial support. So 76.4% is a crucial support. If it becomes a resistance zone, the market will go down. Okay, that's what usually happens. So, and 61.8 is a crucial support, 38.2 is a crucial support. So mark these levels. So it is mentioned right over here. Okay, so these support levels are important. So usually it takes support around these strategies. Okay, strategy to sell around 61.8% for a target till 76.4%. So if you are actually selling, what you have to do is, if the market has to go down from these 61.8 levels, look at this, it hit the resistance zone at 61.8 levels. What happened is it came down to 76.4%, and it's a bit lesser than the 76.4% zone. However, it didn't hit the 85.4%. It hit the 61.8, took resistance, and afterwards came back to 76.4%. Usually if it takes resistance at 61.8, it will take support at 76.4, or it may come down to 91% as well. Okay, so Abhilash, should we start drawing Fibonacci from the lowest point of the day? From where do we start drawing Fibonacci? Yes, absolutely, the support. Okay, Anant has a question. Support levels are with respect to the previous day numbers, right? Okay. So Anant, what I'm talking about is just with respect to Fibonacci series, okay? Not the previous numbers or previous days of highs or lows, okay? So what I'm talking about is a intraday chart of Nifty. I'm drawing Fibonacci retracement from the high level of the day to low level of the day. I usually will start from the bottom. Okay, so from the bottom till the top, I will see that I draw this, and this way I am not confusing myself. When it is a downtrend, you have to check. When you want to see if the market will go higher, you will draw from low to top. Okay, when you want to see that market may go down, you have to draw from top to bottom. Okay, so that is what it has to be. So when you are measuring the, yeah, so when you are measuring this, you want to make sure you have a negative bias on the market, and you want to see how much the market may go down. Okay, so you will draw from the high to the low point of the day, and afterwards you will see at which zones it may be resistance, and afterwards short more for the market to fall down. Okay, that's what means that if you are drawing from the top. Okay, so that's what it is. So usually what you will do is, if it comes to these particular levels, 61.8%, it will go down. That is what you will think, and afterwards you will short it at these zones if it actually takes resistance at those zones. Okay, so these are the support zones which I am talking about. So the 100% is at the bottom. You may not, yeah, see, this is the one, 9607 till 9643. I have drawn a high and low Fibonacci retracement, and so this is what it has done in the day. So it came to the 61.8 level, it took resistance, it came to 76.4, it came a bit higher than 61.8% and again took resistance 76.4. Again it came to 61.8, almost hit 76.4. After taking support again, it went all the way higher ahead of 61.8. It didn't touch 100%. However, it took resistance around those zones. Again, it is moving right around 61.8. It is around sorry, 38.2%, and afterwards it came down to 61.8. It propelled higher and higher. Okay, and afterwards it hit the 0%, and afterwards it came to 38.2 and it went higher. That is what we consider in Fibonacci retracement. If it goes higher, then we'll have to draw the chart higher. Okay, how much higher we can verify, it depends on which charting software which you are using. Okay, usually, so this is what it means. So over here, right, so you have drawn a Fibonacci retracement, and if you want to see how much higher it may go, what you can do is you can draw a line from 61, from this line, so usually 61.8 till 0%, you will draw a straight line. Okay, what you will do is, as of now I can't because there is a retracement level as well. I can't just move this thing. It will usually move higher. uh, so what we have to do is we have to draw from 61.8% to 0% how much there is a gap. Okay, afterwards move this line higher. Ahead of this, it comes to somewhere around, so let's say it's 22, right, 43, so it is around 20 points. So from the top, if it goes above the 0% barrier, how much it can scale? It may at least scale 20 points. Okay, so let us see if it has scaled 20 points or no. 96.46, 40, let's say 96.45. Okay, so it has gone from 96.45 to 96.75. It means that it has gone 30 points up, and it settled at around 96.65, which is 20 points ahead of what we had thought. Okay, so it is around 96.43 over here. However, 96.43, 96.45 is what we are considering. So if we draw a line between these, it has to at least scale 20. Okay, so let's consider 22 points. Has it scaled 22 points? It has scaled 30 points. Okay, that is what is retracement suggesting us. If it goes higher than 0%, how much higher will it go? This is what is the measurement from 61.8 zones till 0%. How much is the distance? How much points is the distance? That points will be scaled up if it goes ahead of the Fibonacci retracements. That is what it means. Okay. So any more question, Abhilash? Should we start drawing Fibonacci from the lowest point of the day, from where we start drawing Fibonacci? Okay, yeah, Abhilash, as I already told. Okay, so Pradeep is saying that I think it is the first hour high and low. Okay, so usually what it is yes, absolutely, it is usually the first hour high and low, which we will be considering. Usually around 10:30 there will be a move starting. Okay, so we don't want to wait more. So we have to be ready for the trading in from the first hour. Okay, So when the trade happens, usually let us check this at what time we are looking at over here. Over here, the time zone. Oh, sorry. Let's remove this. Look at the time zone over here. It is 9:34 when it hit the high, and when it hit the low, it is 9:48. Okay. So first hour, it is absolutely correct that first hour is the place where we will consider the Fibonacci retracement. So because it moves in a erratic zone in first hour or so. Okay, there will be highs, there will be lows. Usually if someone has taken a buy today, sell tomorrow, usually he wants to sell it right away or tomorrow. If he has taken the sell today, buy tomorrow, he wants to buy it and realize the profits he has, or realize the losses and cut the losses, or anything like that. Okay, so first hour decides what we'll do for the next set of hours in the day. Okay, so accordingly we have to keep ourselves, our quiver has to be ready with the arrows to throw after 1 hour, what has to happen further. Okay, so this is what is the time zone. So within 1 hour, whatever the highs and lows it has done, usually we'll consider that. And whatever the 61.8% to the zero level, whatever the zone is, if it crosses this Fibonacci retracement itself, it has to move at least this much higher from the 61.8 zones to 0%. How much ever the points is, it has to move at least that much higher, at least that much higher. So that is what the Fibonacci retracements mean. Okay, so if it has to go up, and if it is a decisive move, not always it moves that much. There may be a sideways movement. However, usually if it moves higher than the Fibonacci retracements, it will go higher. Okay, it will not, it usually will, 95% of the times it will not go lower. So if it goes lower, it means that it is a very upset market on those days. So okay, so the strategy to sell is sell around 61.8 and target at 76.4, and strategy to buy around 76.4 level, or 61.8 level, for the target of 38.2 levels. Okay, this is the Fibonacci retracement. Support zones. Okay, support zones and resistance zones is one other key thing which you will have to know. Support and resistance is very clearly visible for your eyes. Okay, so you can make it out very easily. One is the Fibonacci retracement level, and the second is the support zones, something like this. If it has hit the roof too many times at that point of time, usually it will be the resistance zones. Look at it over here. So how did this form? Because this had formed previously. Okay, so there was a big red candle starting from here. It came all the way here, and afterwards, let's move it a bit higher. Okay, so yeah, as of now we have retracement, so it is not moving higher. So yeah, over here there is a big red candle. It came down from, it touched these levels and it came down. It is a big resistance over here. Okay, and it continues further as well. Over here it comes down, it takes support, it goes till this level, and afterwards comes down again, and this level it comes up, it comes down again, and here it makes the move ahead of it, and afterwards take this as a support itself. Okay, so look at this. This is the beauty of it. As I already told you, when the support zone when the resistance zone is barred, it becomes a support. Okay, so here it went, and afterwards it took support over here, it took support at the break-even levels, and afterwards it propelled higher. That is what it did. So support zones, this is one of the trades which happened. Not sure when this was, just 1 minute. Probably um it was on 19th, I suppose. 19th, yeah, it was probably on 19th May this trade happened. Okay, so yeah, it was on 19th May. So there was okay, it is the same one as the outer candle. So it was on 16th May, so not 19th May. Okay, so here there was two resistance zones. It was this, it was over here. It had a resistance zone, and afterwards it moved lower, move, and afterwards it moved higher, and again it took a resistance over here, it moved lower. After it cleared this resistance zone, look at this, what happened. It cleared the resistance somewhere around 94.76, and afterwards it went to 95.25. So it cleared this resistance zone, and afterwards it went higher. Okay, so this is what the uh, resistance and support is. So it took support around these levels, and afterwards it is the resistance zone here, and afterwards check this. If I draw a line ahead of this support, it again is about this resistance, it again is a support over here. Okay, so after it took support over here, it propelled higher, higher and higher, really higher. Okay, so the strategy to buy is buy above the resistance zone, and after Nifty takes support at the previous resistance zones. Okay, so this is the resistance zone, buy ahead of this over here, and put a stop loss of somewhere over here below this resistance zone, about 5 or 10 points below this, and afterwards look for a secular move ahead of this. It takes support over here, and afterwards you have a confirmation that it will move higher, and it will move really high. Okay, so that is what it means over here. Resistance zone, you know that this is the resistance, this is the resistance. When it clears the resistance, when you have to sell at resistance, what you have to do when you have to sell at resistance zone. Okay, so this is what you have to do. I will give you an example. This is the resistance zone over here. Okay, so it was a resistance over here, and it took support over here, it came down, it is a resistance zone now. Okay, it started at the resistance zone, came down, it tried taking support and tried clearing this. However, this is still a resistance zone, and it is right a bit above the resistance zone. So it is still not in the support zone, so it came down all the way to 13-day moving average, and afterwards it took support, it went bit ahead. However, this resistance zone has played its term. It pushed the market down. That is what a resistance zone does, and it pushed the market down to such a level that it goes, and afterwards there is a doji, and there is no clear indication that if the market will go much downer. So afterwards there is probably a reversal as such. Okay, so that is what it means. There is a doji formed here. It means that ahead of this, whatever happens, that is the trend which it will set, or it may be a sideways movement. Okay, so at the resistance zone, sell it, and keep a stop loss a bit above the support zone, and afterwards look for a sell. Okay, that is what it is. Okay, trend lines. And this is one more important thing. Yesterday I was talking with Amit about the trend line, and in the live blog also I have mentioned that if the trend line is kept, 9,650 is on the cards, and that is what happened over here. Okay, so the trend line was intact, and it actually uh, it broke that trend line, and afterwards it took support above the trend line, and afterwards it hit much higher. Okay, So that is what happened yesterday. So how to draw a trend line? A trend line is drawn by joining the highs when it is a low trend line which you have to draw, and when it is a positive trend line, you will be joining the lows. Okay, lows of the market. That is what you do when you're drawing a positive and a negative trend line. Okay, so let us show you how to draw a trend line. So how many of you know how to draw a trend line? Can you please let me know? Does everyone know trend line? Does everyone know how to draw? Okay, Amit knows how to draw. All right. Yeah, Pradeep knows how to draw. Okay, Narendra knows. Indranath Yadav doesn't know how to draw the trend line. Okay, anyone else? Okay, Amit knows how to draw. Mahendra Singh doesn't know. Okay, so what I mean by the previous sentence is, when you are drawing a higher trend line, you will join the lows of the market. Okay, the candlesticks. When you are drawing a lower trend line, you will be joining the highs of the market. Okay, so let us draw a lower trend line here. We'll zoom in a bit to make sure that everything is visible correctly. Okay, so now I have zoomed in. What you will be doing is, you will not take any aberrations above the trend line. If you draw a trend line joining this top, this top, this top, this top, this top, this top, you will have some more which is left over. Okay, so that is going down as well. So it is a secular bear market which it has shown over here. It has reversed the direction from the top of the day, and it is going downer and down. Okay, so what it is you have to do from the top of this. If you join these, what happens? There will be some more left over here. Okay, what you have to do is, you have to join the top of everything, and afterwards leave it over here. And when this trend line is broken, look at this. When this trend line is broken, look at the gloriousness, what it shows. It came back to the trend line, it took support at the trend line, and at 96.28 it took support, and it went all the way up to 96.76. I had in the live blog. Okay, I don't know how many of you know that live blog is already live. Okay, so this is Abhilash. It may help you out. This is the minute by minute. I will be updating the live blog about what the trades I will be taking and all those things. If any movement is there, what is showing in the news, what triggered the up move. Uh, so everything is here. Okay, so this is the 20-day EMA, and I will be giving update about what is happening. You will really be amazed to see that technical analysis will really help you. Okay, let me go back to the update which I have done. I'm really sorry guys, it is 6:18. However, I have to finish this. You have to know, because from tomorrow onwards I will be teaching my strategy. So if you have to know my strategies, you have to know this. So I will be showing you what I updated. So these are my calls. Okay, so whenever I buy something or whenever I sell something, so I bought a 9600 put at 62 and sold it at 66. Okay, I will be giving you the support zones, resistance zones. If it scales up, what happens? So check this out. I drew this trend line here, and I have mentioned scaled the high of the day, and I want to go to the update which I have done at 11:32. I clearly have told that over here the technical analysis gives you actually so much wisdom that check the trend line. If the trend line is broken, at least 9650 is guaranteed. So at 11:32 I gave an update that if this trend line is broken ahead, 9650 is guaranteed. And what happened is just history. Okay, it touched 9675. I said 9650, it touched 9675. So at 9628 I told that 9650 is in cards. So 9667 is where it ended. So minute by minute you will be getting updates. If you are trading, it will really be helpful for you. So if you want, you can follow, and if you can help others also, you can let others also know that there is something like this Nifty live commentary which is happening, and others also may take profit because of this home. Okay, and they will surely understand something, that there is a technical thing which is going on at this point of time. Most of them may not know what is brewing in the market. With the technical updates which they are getting, they will surely help themselves by you know uh, trading in the right direction and not get stuck in wrong positions. Okay, so yeah, you can see what technical analysis does. If this trend line was broken, and was broken and it took support at the trend line, it went ahead and it touched 9676. So that is one of the things, and this trend line does. So trend line is a line where if it comes nearby as well, it has to either propel it, or it has to either get the market down. That is what a trend line is. Okay, this is the positive trend line which I have drawn by joining the lows. And if it comes to this trend line, it either takes support or it will go really down. Okay, so this is what I'll be teaching you tomorrow. This is the sneak peek about what you'll learn tomorrow, my strategies. Nifty contra calls, Nifty scalp trading, and Nifty trend trading. Tomorrow will be a big session. I hope I'll finish within 2 or 2.5 hours. However, if it extends, I will take it to the next session. Okay, because this is the most important way you will understand what you have to do to make money. Okay, so yeah, let's tomorrow is a big session. If you have any questions at all, I am ready to take the questions, so please throw at me. um, Thank you that you are following, and please spread the word. Okay, I'm here guys. If you have any questions at all, you can throw at me. I'm here to answer it. So all the candlestick charts that you are showing are at 21-day EMA. It is a bit confusing question, Anand. Uh, so what did you mean 21-day EMA? Okay. Probably I understood what you want to ask. So the one which shows in white is 21-day EMA. Okay. So all the charts have 20-day closing average, and that is 20-day closing exponential moving average, and 21-day opening exponential moving average. All these charts which I am showing has it. Okay, so that is one of the strategies which I'll be showing you. How it actually makes or breaks our trade. Okay, if it helps our trade or if it doesn't help the trade. When it doesn't help the trade, in my strategies, okay, this is one of the strategy which is formed by me only. Okay, so not many of them may know it, or maybe they know, however not the 20 and 21. Okay, do we also have to know about Greeks to take up the strategies? Um, Greeks, to an extent, you don't have to, thoroughly mug it up. You have to know delta. Delta is a measure of how much the market, the options will move with respect to the underlying asset, that is the market. Okay, so if the market can move if the market can move 20 points, how much will the options move? According to that, you will see the positive returns which you will be doing, which you will be getting. Okay, so you have to know delta. However, you don't have to mug it up. So you will understand. You will get to know delta by your trading software. Okay. So if I go over here and add any script, futures, normal, Nifty. Yeah, delta is available somewhere. I am not getting that as of now. I will let you know. Okay, delta is required. Will there be separate trigger for buy or sell or short or cover? Probably. Okay, there was a previous one. If we are in buy position with one lot, then sell order to be two lots. With one lot, then sell order to be two lots. Will there be separate trigger for buy or sell and short or cover? Okay, Pradeep, if you are thinking that there may be shorting of options, there will be none. This is only what I'll be teaching is only buy of calls and buy of puts to make money. Okay, so there will, if you buy one lot, you will only sell one lot. Okay, if you buy one lot, you can't sell two lots in my trading strategy. Okay, you'll not have that much money also. I will teach you about the risk management also, how much you have to have in the account, and usually not over trade. When you overtrade, there is something called as slippages. Okay, when there is slippage, you will not be making much money. uh, so it is better that you have lesser money and make more money out of that lesser money. Okay, on a consistent basis. So that is one of the risk management strategies as well, and it is helping ourselves to make more money. Okay, and my strategy works in such kind of market itself. If you are trading with lesser quantities, and you will be making more money. If you are trading with more quantity, you will not be making much. So that is one of the one of the keys of my strategy. Okay, if you have any more questions, I'll take it. Already 6:29. I'm really sorry guys, and 6:29 it is. So I suppose there is okay, Abhilash, lesser quantities lots have more taxes, right? Abhilash, why do you worry about taxes? Don't worry about it, okay? uh, let's not keep the taxes into consideration at all. It is not even an ant in when you are standing in front of a big animal. Okay, I think if I double click on script name, and then you may get Greeks. Yeah, probably. Yeah, probably or probably not. Yeah. Mm, okay. I think so. However, I will try figuring out where we'll get that in this particular software. Okay. So yeah, as of now, thank you very much, guys. And tomorrow is a big day. Get ready for it. So if you have any questions at all, do drop in a mail to me. Okay. All the best, and I will be looking forward for it tomorrow. Okay. Take care, guys. Good night. Have a good weekend. Thanks. Bye.